gentlemen, good morning, good afternoon, or good evening. Welcome to episode 11 of the R3 podcast. This episode is a milestone for me, as I edit it myself. Head of technical by day, editor by night. I am joined today by Tony Walker from Armalytics, which is a data intelligence firm that allows consumers to safely share open banking and other data to deliver financial insights to firms, helping those firms conduct faster and more effective source of funds and wealth checks. Their mission is to create a hugely positive impact on society. With their digital checks, they believe they can help stem the rise in financial crime, stop the vulnerable being exploited, and protect consumers from making poor financial decisions. I am also joined by Gareth from Compliance on Call. Gareth joined the insolvency service in 1985, working initially as an examiner in OR Birmingham before moving into the field of IP regulation. In 2000, he left to head up ACCA's Insolvency Monitoring Unit and then joined Bill Birch at Compliance on Call in 2005. Since that time, Compliance on Call have been providing compliance support services to IPs, undertaking case reviews, technical support, standard document design, and interaction with the multitude of regulators and stakeholders who control the profession. Gareth was a member of R3 Council for 9 years and was, until recently, on R3's Smaller Practices Group. Today's discussion is all about anti-money laundering obligations and post-appointment transactions. So strap yourselves in. Like with all podcasts, it is important to stress that whilst care has been taken in the preparation of this podcast, it is intended for general guidance only and does not constitute legal advice. Let's begin. Welcome to the R3 podcast. Thank you both for coming on. How are you both? Busy, I expect.
Yeah, pretty busy, but all good.
Yeah, as busy as we'd like to be, Ben, but at times it does seem like we're running just to keep still with all the regulatory and compliance changes. And bear in mind, it's our day job. So for IPs, having to keep up to date with all the changes and get on with dealing with their cases, getting new work in, and all the other issues associated with running a practice. I can't but imagine how difficult and stressful it is for them.
No, and that's certainly why I'm not an IP at this stage of my career. So have you got any thoughts on like the current economic climate? Like, what are you both seeing on the front lines?
That's a good question. Actually, we're involved in lots of different sectors, so I guess we do see a kind of an interesting view on the economy as a whole. I guess we're very involved in the legal sector and a lot of property transactions, which actually are remarkably robust, with respect to the sort of overall economic climate and interest rates as the way they are today. It's quite interesting, I guess. You almost have the two counter positions, because we have, on one side you've got growth and new things happening, so property conveyancing and property builds. On the other hand, I guess IP is the opposite end of that spectrum. They're almost like on a balance, on the one's on one side going up, the other's going down, and vice versa. So I think overall we see a lot of growth, and I think obviously we're a tech company. We see a lot of activity in that space. I suppose AI is the big news item at the moment, but it's very much about bringing technical solutions to problems. And I think you'd always thought the pace of change was slow, but it seems to be accelerating, and the systems and features are getting more powerful, and more things can be done that you would have thought 10 years ago that can't be done, it's not possible. But the pace of change astoundingly is continuing to grow, and opportunities are developing for new industries and new ways of looking at solutions. So feels like very exciting times. But yes, the overall economic picture looks quite grim. With war in Ukraine and interest rates and inflation, but the economy seems to be remarkably robust.
What did they report yesterday? AI is a tool, not a creature.
That is true. It is a tool. It is definitely a tool.
Definitely not a creature.
It's not a creature, and I think there's a lot of debate to come about the future and what it does. I think there's a lot of concerns around the harm it can cause, because the fake news elements, and it is, if you've ever used any of those large language models and put questions in and started a dialogue, they look like responses that you'd expect to see. So, you can see how people could get scammed by these things.
Yeah.
A chat bot comes up on your messages saying, you need to make this payment, I'm your bank, and this, it'll look very, very legitimate. I think there's a lot of worry that people use it for nefarious means. Obviously, there's an efficiency piece with AI because it's like a simple Google search, but with actually the answer typed out for you rather than having to read a load of articles. So anyway, yes, I think it's a very interesting where that will take us.
Definitely. Okay, so I don't want to keep you both. So let's get on with the episode. So anti-money laundering continues to be an important part of the work of IPs. Whilst AML compliance may not be, shall we say, sexy, it is important to avoid a supervisory authority's regulatory and disciplinary processes. But it is also an important aspect of public protection. So, listeners, please continue to listen and not switch off to, say, Ed Gamble's podcast Off Menu, which is currently a favourite of mine, as I can assure you, you will get something out of this. So in this episode, we're going to look at an office holder's AML obligations in respect of post-appointment transactions and consider some practical solutions to the verification of identity and verification of the source of funds. Got your attention now, haven't I? So let's start with, why are we discussing this topic, and has anything actually changed?
Thanks, Ben.
Sorry, I'll take that one.
Tony?
Yep. So I think Gareth, we're obviously going to go through a lot of the detail around the anti-money laundering regulations and how they should be applied in the insolvency profession. But broadly, the actual regulations are unchanged at the time. There have been a few tweaks, but what really has changed is what I would call the tone from the top. And that's not a play on my name. It's actually what are the chiefs saying. So people will have heard of lots of bodies, and we'll talk about in this, but people have heard of OPBAS. So OPBAS is the professional body that supervises AML for all professional bodies. They've recently put out their findings on how the state of play is. And what they actually reported upon was they can see that the supervisory body, so your industry body and your regulators, have actually got a reasonable set of standards that they are obliged or pushing on that obligation onto their clients. What they aren't seeing and what their concern is that they are not supervising those underlying professionals well, and they don't believe that that is actually getting to the heart of the problem. So the broad message is more needs to be done, and it isn't in so much as the regulation needs to be tightened up and it needs to be clearer. It's more about, we need you to start pushing your professionals to actually do what we're expecting them to be doing, and we're not seeing enough of that. So that's where the tone from the top comes from. What we've seen in other sectors is actually the same message, and what tends to happen is they tighten up the regulations, they reissue them and say, look, we're expecting this from you, and then if they're not getting the solutions they want, then you'll see more supervisory action, more enforcement action, which is often not just reprimands but fines. And we've seen that in other sectors, and they've had to make changes to address that. And one thing we would say is, I would expect you all to hear more on this subject from your industry bodies and from the overall OPBAS. But I think as Ben alluded to in his point there on at the beginning about why does it affect us? It's like, why is it important? Not the obligation piece, but why is it important that we're actually doing this? So let's be clear. Money laundering is estimated to cost the UK economy something north of £100 billion a year, which is from the government figures. And it's not a victimless crime. And that's why we have the focus on anti-money laundering, and why we are checking on source of funds and ID verifications.
Right. I like the tone from the top. You sure that's not a play on your name, Tony?
Yeah, it does sound like it, doesn't it?
So, Gareth, can you give members an overview of the status of an IP as an office holder and how AML applies to them, please?
Yes, certainly, Ben. First, a recap on the status of the IP as office holders. There's a lot of legislation in force regarding anti-money laundering, which Tony's already mentioned. You've got the proceeds of crime and terrorism financing as well. But the key piece you need to be aware of is the money laundering, terrorist financing, and transfer of funds, open brackets, information on the payer, close brackets, regulations 2017. That's a bit of a mouthful, so I'll just refer to them as the MLR. While not legislation, the guidance issued to the accountancy sector by the CCAB, the Consultative Committee of Accountancy Bodies, is also very important, particularly the Insolvency Appendix. This guidance was signed off by HM Treasury in May 2022, and your licensing body requires you to comply with it as well as the AML legislation. The AML regime applies to persons who carry on business in the regulated sector, which includes insolvency, and to all relevant persons, which includes someone acting as an IP within the meaning of Section 388 of the Insolvency Act or Article 3 of the Insolvency Northern Ireland Order 1989. In other words, acting in respect of a formal insolvency appointment where you have to be an IP to be appointed office holder. So we're talking about administrator, liquidator, trustee in bankruptcy, etc.
Great. So what about activities outside formal appointments?
Yeah, IPs will often undertake activities outside of formal insolvency appointments, such as acting as fixed charge receivers, undertaking IBRs, or restructuring or advisory appointments. These may be other defined services under the MLR, such that the AML regime would apply to them, but the position's unclear. If you decide that such work is not a defined service, the CCAB guidance indicates that you should document the rationale for your decision. Even so, I would suggest that given the uncertainty over the status of such work and the penalties for getting it wrong, the risk-averse approach is to apply your AML regime to such assignments as well as to formal insolvency appointments. In the remainder of this podcast, though, we will just focus on post-appointment AML obligations arising in your formal insolvency appointments. Quite simply, an office holder's post-appointment AML obligations will depend on the case type over which you are appointed, and in respect of corporate appointments, the nature of the business of that company or LLP. When acting as trustee in bankruptcy or as trustee in a sequestration or as trustee in a trust deed, the debtor's assets vest in you as office holder, such that when selling the debtor's assets that have vested in you, you are transacting as principal. When acting as administrator, liquidator, or administrative receiver, however, you are acting as an agent of the corporate entity over which you have been appointed, and you transact as such when disposing of assets. As agent, then when acting as office holder, you only take on the same AML obligations that already existed in respect of that corporate entity prior to your appointment. So if the corporate entity was not trading in a regulated sector, then just because an IP, who is a regulated person, is appointed office holder, that does not bring the company into the AML regime. That does not mean to say that you cannot just close your eyes and not be concerned about the source of any funds received, but no positive AML obligations are imposed on you in addition to those that you already have to observe as a regulated IP. In contrast, though, if the corporate entity was trading in a regulated sector, then you take on the same responsibilities as those that existed for the corporate entity, such that the AML regime will continue to apply to the corporate entity and you as its agent while you are in office.
Great, thanks, Gareth. I know you've spoken a lot already in detail, but can you also talk about an office holder's post-appointment AML obligations?
Sure. I'll start with those arising from asset realisations in insolvency appointments before moving on to looking at the position regarding monies received as a result of recovery actions taken, receipt of monies from a third party, and finally looking at distributions to members and dividends to creditors.
Thank you.
No problem. Starting with asset realisations, first a quick word on voluntary arrangements and moratoriums. These are debtor in possession insolvency procedures where the debtor or corporate entity will continue to control their own business affairs and transact as principal when any assets are sold or book debts recovered, such that you, as office holder, would have no involvement in the transaction. As a result, you have no AML obligations as regards asset disposals, but there will be as regards the receipt of third-party monies, which I'll come on to later. As already mentioned, when considering asset realisations while acting as administrator, liquidator, etc., there are two different scenarios where the entity over which you have been appointed operated in an unregulated sector for AML purposes and where it operated in a regulated sector. Clearly, the first thing to do is to check whether the entity you are dealing with operated in a regulated or unregulated sector. That's something that you will have found out as part of your pre-appointment KYC work, so is beyond the scope of this podcast. Where the entity operated in an unregulated sector, the starting point is that you have no AML obligations in respect to the realisation of assets or the receipt of the proceeds from the sale. So you can instruct agents to dispose of tangible assets and receive the funds from them for asset disposal and receive monies from debtors, whether directly or via book debt collection agents, without needing to have the AML implications of the receipt of those funds at the forefront of your mind. Having said that, though, you cannot forget about AML completely. Not even where you or your agents are paid for the assets or paid by a debtor by bank transfer or even cheque. In that situation, you cannot turn a blind eye and still need to be alive to the possibility that the funds you receive are the proceeds of crime, and, where appropriate, take steps to obtain verification of the identity of the payer and of the source of funds. You need to come up with your own policy as to when you will take such steps, but the following are some examples of red flags that illustrate the potential for you to receive the proceeds of crime. So you've got a situation where the funds are coming from a jurisdiction that is seen as a high-risk country for AML purposes, or a third party is making a payment on behalf of the purchaser or debtor, or the goods or services provided to the customer in respect to which payment is being made were not those normally supplied by the insolvent entity you're dealing with. There'll be other red flags that you can think of, but it's a matter of making sure that you have your own set of risk factors that you disseminate to your staff. You also need to ensure that you disseminate this information to your agents who are receiving the funds on your behalf, such as your chattels agents or solicitors, since while they may have their own AML obligations, they are merely acting as a conduit for the funds into the estate account or ASA, so you need to ensure that you do not end up inadvertently handling the proceeds of crime. While bank transfer will be the most usual method of payment, very occasionally you or your agents will be paid in cash. That then creates potential problems for you. First, if you or your agents receive the sterling equivalent of 10,000 euros or more in actual physical cash, then that may turn the corporate entity into a high value dealer and require registration with and supervision by HMRC under their AML regime. Remember, you are merely acting as agent of the corporate entity, so it's irrelevant that you are a regulated person and you will have to register the corporate entity with HMRC. There's a problem though, since HMRC indicate that no one should accept high value cash payments until they are registered as a high value dealer. So unless you know in advance that someone's going to pay you or your agents in cash, you won't know to register and so will be unable to accept the cash. The second problem is that even if the amount you or your agents receive is a substantial amount, albeit less than the sterling equivalent of 10,000 euros, you should still question the payor as to the source of funds and ideally obtain verification of their identity and of the source of funds in order to protect yourself from inadvertently handling the proceeds of crime. What constitutes a substantial amount that would trigger such action is something for you to determine as part of your practice AML considerations, although it would also depend on the nature of the business of the corporate entity you're appointed over, since cash payments are more prevalent in some business sectors than others. In practice, though, you should try and avoid receiving large amounts of cash. As already mentioned, your chattels agents or solicitors may well have their own AML obligations, but you should still let them know the level of cash over and above which you would need to undertake additional checks before you can accept it into the estate account. It does not matter that the cash has been converted into a bank transfer from your agents, since they are merely acting as a conduit for the funds into the estate account or ISA, So you need to ensure that you do not end up inadvertently handling the proceeds of crime.
Thanks, Gareth. That was really sort of a refresh for myself. Okay, so what about regulated and unregulated entities? I mean, what are the AML obligations in this respect?
Having said that there are no AML obligations imposed on you where you're appointed over a corporate entity that operated in an unregulated sector, I've just provided you with a lot of information about when you might actually need to take action. So turning to where you are appointed over a corporate entity that operated in a regulated sector, in that situation, quite simply, you will need to consider the same issues that I've already covered in respect of an unregulated entity, but there are also additional obligations imposed on you, whether any post-appointment transactions or a series of transactions involving the same payor, where the sterling equivalent of 15,000 euros or more is being received by the corporate entity that operated in a regulated sector. You need to ensure that you undertake a risk assessment in respect to the transaction and undertake appropriate customer due diligence of the entities involved in the transaction based on that risk assessment. You should also consider whether it's necessary to verify the source of funds being received using the risk assessment you've already completed as the driver for that, together with the existence of any red flags under your practice policy that I've already mentioned.
Thanks, Gareth. So that's covered off asset realizations in respect of corporate entities. But what about where you are realised assets in respect of individuals, i.e. where you're acting as a trustee in bankruptcy, or a trustee under a trustee, or in Scotland, a trustee in respect of a sequestration?
The key point here, Ben, is that the assets vest automatically in you as trustee, so that you are acting as the principal in respect of the asset realisations, whether you undertake the realisation yourself or you instruct agents to act on your behalf. Since you're acting as principal and you are a regulated person, then the AML regulations apply in respect of any asset realisations. But what does that actually mean in practice? Where the asset realisation is for the sterling equivalent of 15,000 euros or more, you need to undertake a risk assessment in respect of the transaction, undertake appropriate customer due diligence of the entities involved in the transaction based on that risk assessment, in other words, the purchaser of the assets or the customer of the debtor in respect to book debt recoveries, and then obtain sufficient evidence to satisfy yourself as to the source of funds and to show that they are not the proceeds of crime. Even where the amount being received is less than 15,000 euros, you should still consider whether it's necessary to verify the source of funds being received, checking for the existence of any red flags under your practice policy that I've already mentioned. This approach will apply whether you are disposing of the assets yourself or receiving direct payment of a book debt, or if you're receiving payment via agents instructed to act on your behalf. As a result, you need to ensure that your agents are aware of your obligations, particularly where you are using solicitors to deal with land and buildings belonging to the debtor. I mention this in particular since the Law Society's rules allow the vendor solicitors to rely on the customer due diligence undertaken by the purchaser's solicitors as regards the evidence of the identity of the purchaser and the source of funds. While that would meet the AML obligations of your solicitor, it does not meet yours. And in a bankruptcy, you are the one who is transacting with the purchaser as principal. While the MLR set out the steps that you can take to rely on the evidence of identity obtained by a third party, which involves entering into a written arrangement with that third party, you would still remain liable for the third party's failure to comply with the provisions relating to customer due diligence. As a result, it's best avoided wherever possible. So you need to obtain your own evidence of identity of the purchaser. Remember, though, that you can rely on evidence of identity certified as being a true copy of the original by a suitable professional person. So rather than obtaining your own copy passport, etc., you could obtain a copy from the purchaser's solicitor. You will also need to satisfy yourself as to the source of funds. Just one final point on the realisation of assets as trustee, and that's in respect of jointly owned land and buildings. In that situation, the debtor's title to the property does not vest in you, just their beneficial interest in the equity, such that when a jointly owned property is sold, you are not transacting as principal. Even so, since you're realising the debtor's interest in the equity that is vested in you, you still undertake the same AML checks.
Thanks, Gareth. So I know we've covered off a lot so far, but what next?
Ben, I'll deal next with actions brought while acting as office holder. Here, the first point is to distinguish between rights of action that lie with the office holder, such as transactions at an undervalue, preferences, wrongful trading, etc., and those that lie with the corporate entity itself, such as in respect of misfeasance or recovery of an overdrawn director's loan account, etc. Where the right of action lies with you as office holder, then the monies received will be by you as a regulated person, and so subject to your ongoing AML obligations. The position will be exactly the same as that I've already mentioned regarding the realisation of assets as a trustee. As it's important, I'll go through it yet again. Where you are receiving the sterling equivalent of €15,000 or more, you need to undertake a risk assessment in respect to the transaction, undertake appropriate customer due diligence in respect of the entities against whom you have taken action, and any third party who may be providing the funds to settle the claim, using the risk assessment as the basis for that verification work, and obtain sufficient evidence to satisfy yourself as to the source of funds and to show that they are not the proceeds of crime. Where a third party provides the funds to settle the claim, additional factors that you should consider as part of your risk assessment include the relationship between the third party and the insolvent, and the rationale for the third party actually settling the claim.
Okay, but so what about where the right of action lies with the corporate entity, not you as office holder?
In that situation, Ben, the position will be exactly the same as regards the realisation of any other asset, with your AML obligations depending on whether the corporate entity was or was not trading in a regulated sector.
Okay, right. So can you talk about receipt of third-party funds by the office holder? For example, in respect of a contribution towards costs or a lump sum contribution in an IVA or CVA, or the provision of funds to annul a bankruptcy order?
Turning to the receipt of third-party funds by you as office holder in respect to the sort of situations you mentioned, Ben, then the CAB guidance indicates that you should undertake a risk assessment and carry out customer due diligence on the third party providing the funds. As part of that risk assessment, you should consider issues such as, same things cropping up again, the relationship between the third party and the insolvent, and the rationale for that third party contributing to the insolvency state. You should also obtain sufficient evidence to satisfy yourself as to the source of funds and to show that they are not the proceeds of crime.
Thanks, Gareth. Tony, do you want to come in here?
Yeah, there's a couple of things that that Gareth has said a number of times, and I'll sort of quote them back, and then I'll talk through them very briefly. With respect to AML, you can't turn a blind eye and must still be alive to the possibility that funds you receive are proceeds of crime. So obviously Gareth's covered off all the examples where you absolutely must act, but there is this kind of you can't just ignore this, and I think what I would highlight on that was this idea that within the CCAB guidelines, you've got your policies, procedures, and risk factors, and that's how you make those assessments. And that the clear driver from regulators is always this point of, can we see you have policies and procedures? Can we see them being done consistently? And also, can we audit the evidence? And can we see that evidence? I guess that's the other point that Gareth picked up on a couple of times was, sufficient evidence to satisfy yourself as the source of funds and to show they are not proceeds of crime. So sufficient evidence, obviously, that's the main expectation of AML, is to have the evidence. But the key element there is actually gathering it in an auditable format and to show the regulator if asked that you have this information and it's clear what you saw or didn't see. And then therefore, the practitioner would be comfortable that the question of source of funds has been addressed both adequately and suitably, and as per the CCAB guidelines. So I think there's those two things of, not turning a blind eye and you having to have evidence that you've, undertaken a reasonable source of funds check.
Good points. Yeah, thanks, Tony. So moving on. So on the subject, moving on. So, but on the subject of post-appointment AML obligations, what are the considerations when they making distributions to members or even a payment to dividends to creditors?
The recipient of a distribution or a dividend, they're not clients for the purposes of the MLR. As a result, you would not usually be required to undertake customer due diligence on them post-appointment, although you would, of course, have undertaken it pre-appointment in respect of any members who were beneficial owners. Even so, when making the distribution to members or paying a dividend to creditors, you should still consider your exposure to financial sanctions. Remember, it's prohibited to make funds or economic resources available directly or indirectly to or for the benefit of anyone subject to financial sanctions. You should also consider whether any other sanctions restrictions apply, such as trade, transport, or immigration sanctions. I'm not saying that you must check the sanctions lists in respect of each member or creditor before paying them, although that is certainly one approach. But you should have a risk-based practice policy so that staff know when they need to make such checks. And that policy should be enough to make sure that you do not pay money to sanctioned individuals and companies while limiting how often you actually have to run sanctions checks. So, for example, if all members are clearly UK nationals of UK registered companies, or the creditors are clearly UK registered companies and financial institutions, you might not need to check them at all. But if the company had any overseas members, or the company or debtor had creditors in jurisdictions where sanctions are prevalent, then thorough checks would be appropriate. It's a matter of sorting out a practice policy and then following it.
Cool, thanks, Gareth. So we've discussed the technical requirements around the AML obligations, but there is a practical element of how this is achieved and how other sectors address the requirements. Tony, can I ask you to step in here?
Well, certainly. It's a very, very broad topic, Ben. But whilst the obligations are the same across sectors and the regulatory requirements of the firms to have a risk matrix to assess clients against, which leads to policies, procedures, and risk factors that are consistently applied and auditable. So far, it is all the same. But what we have seen in the legal sector is the adoption of technology to address their needs for KYC, AML, or better still, what it should be called, understand your client. And whilst the utilization of technology for the KYC element using the electronic ID and verification products, not necessarily a photographed copy of a certified copy of a passport, but actually the EIDV, it's been prevalent in the legal sector. And I think people lambast the legal sector often for not being technical savvy, but there's certainly a huge usage of these sort of technologies. And it also seems to be slowly being adopted within the accounting profession. I was at Accountex last week, and there are a number of KYC providers, talking to accounting professionals to make that element easier. But it's clear from Gareth's overview, you need to be alive to the possibility that the funds you receive are the proceeds of crime. And that's the AML component, which is often left out of that KYC, understand your client piece. But that needs greater attention. Well, once again, the legal sector have adopted is technology around the understanding of customer source of funds. What has historically been a 3-month bank statement that someone has to look at and then sticks in a drawer. But now, utilizing technology like open banking as we do, data can be accessed digitally and therefore analyzed automatically with insights provided to allow professionals to make easy decisions as to the risk category to assign to an individual or a business. These insights can also be tailored to suit the individual risk appetite of the firm. But note, the decision rests with the professional and is not outsourced, but clear analysis can be outsourced and obviously aids in your assessment. So to address the regulator's concern on the back of your policies and procedures, having a consistent approach and an auditable evidence of review provides a much stronger foundation for the professional's AML process. We've had significant traction with this efficient, consistent, and auditable process, simplifying the gathering analysis of data to address the source of funds question in other sectors, already and with the same challenges. But it's also important to remember that these things need to be relatively frictionless for clients. Our experience has been that clients can undertake a thorough source of funds check with us in a couple of minutes.
And as someone who used to work in practice, time is of the essence for a lot of IPs and professionals out there.
Yeah.
So any comment on, I think this goes back to Gareth, so any comment on suspicious activity reports?
Yes, Ben. I'll let you have a few thoughts about SARS and more importantly, seeking from the NCA, that's the National Crime Agency, it's another acronym. So seeking from the NCA a defence, which is formerly known as a consent to a principal money laundering offence. In other words, you're getting something from the NCA that would provide you with a defence should it subsequently turn out that you've been handling the proceeds of crime or committing one of the other principal money laundering offences. So as you're aware, where you suspect or know that property is criminal or suspect or believe that something is or may be terrorist property, your practice's nominated officer, commonly known as the MLRO, should submit an online SAR to the NCA. But what about where you want to draw some or all of the monies received as fees, or distribute some or all of the money to members or creditors? Taking those actions would be an offence of converting the proceeds of crime under Section 327 of the Proceeds of Crime Act 2002. I'll refer to that as POCR going forward. And also an offence of acquiring, using and possessing the proceeds of crime under Section 329. The solution to avoid committing those offences is to submit a defence against money laundering, AML, request at the same time the SAR is submitted. Where you've submitted a SAR and have the appropriate consent of the NCA, you will not commit one of the major offences under sections 327 to 329 of POCR. So once a DML request has been submitted with a SAR, it enters what is known as the notice period, which is 7 working days starting from the day after the SAR is submitted. During that period, the NCA will assess the information, consult with partners as necessary, and make a decision to determine the appropriate response. Their main objective is to identify whether there's likely to be a law enforcement response to the suspected or known activities that you've outlined in your SAR within the 21-day moratorium period that follows refusal of a DAML request. If there is, then consent will be refused and you will not be able to draw fees or make a distribution without committing a major offence under POCR, which is not something that you want to do and still keep your insolvency licence and liberty. In cases where there is no likelihood of an enforcement response within the moratorium period, then in most cases, consent will be given. In some cases, though, the NCA may close the case due to a lack of information and neither give nor withhold consent, which will then leave you unable to deal with the funds in case you end up committing an offence. Consequently, make sure that you provide as much information as possible about the funds received and the source of funds when submitting your DAML SAR.
Thanks, Gareth. Well, we've covered quite a lot today, so thank you. Are you both able to give members sort of an overview of some of the key points we've covered today, please?
I'll give you some bullet points, Ben. In no particular order, IPs are relevant persons when acting as an office holder in a formal insolvency appointment and so subject to the MLR. IPs act as agents of a company over which they are appointed office holder. The company itself may operate in a regulated sector, and if so, the IP takes on the company's AML obligations when acting as office holder. In a bankruptcy, sequestration, or a trust deed, the debtor's assets vest in the IP, and so they transact as principal. In all cases, you need to be alive to the possibility that the funds you receive are the proceeds of crime, and where appropriate, take steps to obtain verification of the identity of the payer and of the source of funds using a risk-based approach. Where the company is a regulated entity or in a bankruptcy, sequestration or trust deed, and there are post-appointment transactions involving sterling equivalent of 15,000 euros or more, there's the added need to undertake a risk assessment in respect of the transaction and undertake appropriate customer due diligence of the entities involved in the transactions, using the risk assessment as the basis. You should avoid cash transactions where possible, and certainly those involving the sterling equivalent of 10,000 euros or more, in order to avoid becoming a high-value dealer. Where third-party funds are received as office holder, undertake a risk assessment and carry out customer due diligence on the third party providing the funds. Take a risk-based approach to checking the sanctions list before making a distribution to members or paying a dividend. And finally, you'd be pleased to know, issue a DAML SAR to obtain consent from the NCA to pay out funds where you suspect that you are holding the proceeds of crime.
Thank you, Gareth. Tony?
Well, as a technology provider, I expect me to summarise that the increased use of technology to simplify and bring consistent and efficient processes to your practice, which have been traditionally poorly serviced and generally lacking in auditable evidence. So with the advent of open banking and services provided by firms like Analytics, the ability to make digital and efficient a manual and time-consuming task is compelling. To reiterate that the tone at the top is a greater expectation for addressing the proceeds of crime being integrated into legitimate transactions. Industry bodies and professionals will be expected to address these threats, and increasing enforcement action is to be expected, and as it has been seen in other sectors. So the utilisation of technology to simplify your process and increase scrutiny and expectation from the regulatory bodies on your practices are my prophecies for the future.
Well, thank you very much, both of you. And I mean, we've covered quite a lot, shall we say? But it's all been, for me, it's been really refreshing to hear. And I'm sure our members will find the discussion really interesting. And I'm sure members will have learnt a lot as well. Before you both go and take a breath, I ask all guests on the podcast this question: What is the one thing you ever learnt during your career so far that has stayed with you throughout? I'll start off with Tony this time.
I did read that question when you first sent them out, and I thought I'll have a good answer for this, and I haven't yet. I think I suppose I've got a somewhat unusual career path, and I think that's probably one thing that's, I don't know whether it's a learning, but it's more that you are not on a fixed path in life necessarily, and I think you have a lot of choices you can make. I've moved between lots of sectors in my time, done different roles, very unrelated activities, and I suppose there's nothing really stops you other than your imagination and your drive to do it. And I guess that's one thing I've learned, is that if you want to do something, there isn't really much stopping you doing it. You should try and find out how to get in there and do it.
Like that, Tony. Thank you. I think I needed that. Again, Gareth, over to you.
See, that I've done a lot of talking in this podcast, so I might as well end on a similar vein. I've not got one. I've narrowed it down to three, I'm afraid.
Okay.
You never stop learning or building on your experience. There's no such thing as a stupid question. And things are not always clear in insolvency. There's a lot of grey uncertainty and lots of different ways of doing things and achieving the same best result for creditors and other stakeholders.
Brilliant. I like those. Yeah, I'm very cool. Well, thank you very much, both. Thank you for listening to this latest episode of the R3 podcast. I hope you found the discussion informative and useful. If you wish to explore the services of Analytics or Compliance on Call, please check out the links on the webpage. Thank you again to Tony and Gareth for joining me today. Should any members wish to be a guest on the R3 podcast, please contact me. My contact details are on the R3 website, or simply message me on LinkedIn. Keep well.